So if you look at something like a Nikkei, it's up around 1.5%.
As far as the restructuring is concerned, remember these layoffs come ahead of a speculated IPO filing by Ola Mobility.
On the downside, the swing low, which is 22,385, must not break now. 22,671 is where the Nifty is starting this morning.
अब मेरा लक्ष्य है पीएम सूर्यघर की गर्म योजना और जीरो बिजली बिल.
In the next 2 to 3 years, we would want to be number 1 or number 2 in this segment.
Basically, we have a very healthy bid pipeline in terms of the exports, and the margins have been very steady for last 3 years, which is about EBITDA of around 18%.
And we've got plenty of green on the screen once again.
What was also discussed was that, surrender value needs to be increased for policyholders in some form or the other.
With respect to the IPO details, it's a rupees 1,500 crore of IPO.
Nifty is up 100 points. It's been quite a decent day for equity markets so far.
We often complain that there is no follow-through on day 2, but I don't think we can complain today because the market is up and following through nicely. You got 100 plus points on the Nifty. The banks index is up 1%, so it's all good green. This is Closing Bell. We're coming to you from the CNBC-TV18 Modi Roswal studios. I'm Prashant. With me, my colleagues Surbhi and Rima here in the studios, and Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Just look at that intraday chart of the Nifty Bank. That's where all the action is in the last 10 minutes. The Nifty Bank has skyrocketed 500 points. Axis Bank 3% up. Axis Bank 1.5%. Innocent Bank 3%. ICICI, HDFC, SBI. All of them are showing that big 2 p.m. move.
Absolutely. I guess, the bulls want to reach out for the records. In the Nifty, it's all about fresh highs. Who knows, Nifty Bank, Prashant, what do you think? We'll get to that magic 50K mark or what by the end of this hour?
50 तो अभी हो जाएगा.
It's actually hardly any points away.
70 points away.
It's 70 points away, right? So I think that should happen hopefully now, and we'll get it done and dusted, right? We don't have to wait for 50 for Thursday morning. But Nigel, do you want to come in?
Yeah, that's right. It's going to be the weekly expiry that plays out. Normally it's on Wednesday, but today, in fact, since tomorrow we're going to be holiday, that's why you have both the weekly expiries that play out. That's the Nifty Financial Services Index as well as the Nifty Bank. And we had made this point earlier this morning as well, that the entire focus could be on the financial and the banking names purely because of this technical factor. And we're talking about Mount 50,000. That's almost here. The Nifty as well on its way to around the 23,000 odd mark. So 50,000 on the Nifty Bank, that's a great number. A few months ago, it was underperforming, and take a look at the way it's come back in style, guys.
Oh, yeah, absolutely. And, the other thing is, this morning, there was some amount of, doubt, really, because yesterday's move was not, there was not too much institutional activity, right? FIs were, they were buys, but very small, and locals did bulk of the heavy lifting, but FIs were absent. And what the FI and FNO data showed is that a lot of it was just covering. So it's good that things have not faded or, they've not. There is continuation. And I think the institutional numbers later today also perhaps will be interesting to watch, and maybe there'll be a little bit more there. I'm talking about cash market. So just a couple of points. So new highs, private banks once again providing help. So you look at Axis, HDFC and ICICI, as Rima pointed out. Between them, I think there is about 45-50 points coming in from these 3 banks. In percentage terms, these banks are not doing that much, but in terms of contribution to the Nifty, they are. Autos outside of banks, again, another sector which is doing well. Mahindra has been up 5% for a while. Real estate, not quite a big constituent in the Nifty, but doing well. And I mentioned the private banks, but PSUs are also looking quite good. Small caps and mid caps between 0.5% and 0.75% gain is what we have. So pretty good looking screen all over as we go into that holiday tomorrow. And tomorrow later in the evening is when you get that Fed decision, and sort of Jerome Powell speaks and it takes questions, etc. In any case, we would have reacted to it on Thursday morning. Maybe there would have been some pre-positioning going into it yesterday, but I guess that'll have to happen in the next 60 minutes or so. Rima.
Okay, by the way, it's the banks which continues to catch the attention. It's a 1,700 point up move on the bank Nifty in the past 2 days. So on Friday, it was a 48,200 close on the Nifty Bank. So in 2 days, yesterday and today, we've added 1,700 points on the Nifty Bank. ICICI Bank has gained 5.5%. Innocent Bank has gained 6%. Again, these are 2-day moves that we're talking about. State Bank of India is up 4%. HDFC Bank amongst the large cap, perhaps has trailed a bit with a 1.7%. But that's where all the action is. The advanced decline ratio is holding up in the green. The mid and the small cap index moving in step with the frontliners.
Absolutely. And one more trend that stands out is the return of the PSUs. They're doing really well today. PSU banks and even some of the non-bank PSUs. I just want to point out the moves that we're getting right now on a REC and PFC. REC's numbers came out. Of course, we'll have Abhishek join in on some more details. Profit was up some 34%. NII was up 25%. Asset quality was stable. But there are some extraordinaries as well to that PAT number. So let's just wait on it. But REC has pulled up PFC along with it as well. So that's the other one, up 5-6% higher. And then even others. I mean, PNB, Bank of Baroda, quite a few of these other names, BHEL. So in general, PSUs are finding number of takers as well. Today, I guess, Nigel, we can't complain too much on the broader market because the mid-cap index, I mean, it's actually outperforming the Nifty. Not as smart as the bank Nifty, but still outperforming the Nifty.
Well, that's right, Surbhi. You know, the Nifty bank, that's really the star, and it's seeing a follow-through session, so that's pretty good news. But I think you just focus on Adani Ports. There's a rating note that's coming from CARE. So we'll try to get that up for you on the screen as we speak. The Adani Ports is a stock that should keep on your radar. Adani Ports in special economic zone. There is a rating that's been assigned from CARE. I will just try to get you that in further details. But it's with regard, to their rating. So we'll get to that in a bit. For the time being, let's get in Mitesh Thakkar. Mitesh, what do you view today's trading session? And what would you do? Take some money off the table, or this market's got momentum? You'd rather keep it, even though we have a holiday tomorrow?
Yeah, I think I would rather keep it, Markets making new high, closing there is a very comfortable feeling. And closing at new highs does suggest that there should be chance of continuation. Given the fact that the market itself wants to close before a holiday at a new high, and is even slightly more positive. Of course, there's always a risk attached to this kind of a move. But the odds, if I was to say, will be in favor of a continuation on on Wednesday. And therefore, I think I would want to keep positions open. In fact, on the stock side as well, we are trading with long bias. So have a buy on Astral with a stop below 2100 for targets of 2210. And an offbeat bank, that's Karur Vysya Bank, making a new high. So that's a buy as well. Keep a stop below 198 here and for a target of 230.
Okay, let's move on and talk about the big gainer today, and that's Mahindra & Mahindra. The company has launched a facelift version of XUV 300 named XUV 3X0 with prices starting from 7.5 lakh rupees. Sonia joins in with the details of this launch. Sonia.
Well, the attraction towards this new product is really picking up in the market, and that's why you're seeing such a big move on the stock as well. It's a top Nifty gainer today. The stock is up 22% in 2024, and the stock hit a 52-week high of 2129 rupees on the 22nd of April. Now, as you said, it's a facelift of their earlier product, which had done very well, the XUV 300. The pricing is something that has flown very well with the street. The base price is 7.5 lakhs and it goes all the way up to 15 lakhs. So this compact SUV segment is picking up in a big way, and M&M is gaining ground in this space. M&M has invested 650 crores for this product. Bookings will now open on the 15th of May. The XUV 3XO, the launch, is expected to help M&M strengthen its market share in this space. Currently, it's sitting at about 16-17% market share, and the plan is to go from number 3 position to number 1 in this SUV space. The compact SUV segment is also picking up in a big way. It now forms 50% of the total UV market. Other major players in this segment are Tata Motors and Maruti with 28 and 26% market share respectively. Now, if you go by what brokerages are saying, Nomura says that the XUV 3XO launch has the potential to double sales, and they talk about how the potential is to have 6,000 to 8,000 units per month only from this launch. They maintain M&M as their top pick in the OEM space, and they say that the new products will continue to drive the re-rating. Back to you.
Okay, Sonia, the Excite also came out with numbers. You want to just take us through that one as well?
Yes, it was a really good set of numbers, Prashant. So the margins went up 250 basis points year on year at 12.8%. And if you remember, the stock, not just today, but in the last many days, has risen substantially. It's up almost 50% in 2024. Now, the revenue growth was also healthy, 13.5%. EBITDA went up 41%. And the margins, as I said, up 250 basis points year on year. The management commentary was also very positive. They say that now they have zero debt on the balance sheet and most segments have picked up for them. There's strong domestic demand in the automotive division. Exports are recovering at a gradual pace, and even the industrial division, which was on the slower side in the past couple of years, has now recovered. They talk about double-digit growth driven by an increase in private and public capex and the government's thrust on infrastructure building. The big opportunity for Exide really is in the lithium-ion cell manufacturing project, which is used to manufacture EV batteries. And that is something that they're focusing on in a big way. They spoke about how the manufacturing project is progressing quite well and will be commissioned within defined timelines. Back to you.
Okay, all right. Got that. Sonia, thank you very much. By the way, those are IOC numbers and they're not looking good at all. The poll that Sonal had put together that was talking about a bit of a profit decline, but this is a much sharper fall. There's a 40% decline in profits, and the gross refining number is way lower than estimates. They've done about $8.50 to the barrel versus street expectations, at least those are Motilal estimates, of about $15 a barrel. So sharp disappointment, which explains the reaction on the stock as well. We'll get Sonal in to explain these numbers to us in just a bit. But let's just discuss, of course, all the auto giants and M&M's top gear performance further. We have Prakash Diwan joining in. Prakash, good afternoon. Good to have you on the show today. So M&M, I go back to our old conversations. I know you've been an old-time M&M lover, Prakash. But you tell us, I mean, are you as optimistic on this new facelift of the XUV 3XO, as it's called? Can it really turn M&M's fortunes to that extent, as some of the brokerage notes are pointing out?
Good afternoon, Surmi. So, I think the joker in the pack is the pricing. India is still, especially the compact SUV market, is a very price-sensitive band. You have people wanting to upgrade to an SUV, want all the features of an SUV, but don't want to probably pay top-notch prices for that. Yeah, and I think they've got that right. And if you actually see the list of specs and the features that they've done, they've learned it from the Kia and Hyundai business models. Load the car with so many features that there's nothing that you miss out on, even if it's not like the best in class in some of those respects. But people love having features whether they use them or not, especially people who are upgrading to these compact SUVs. So it's a market that's otherwise very competitive, very price sensitive, but I think they'll do well. Whether they can become number one and in how much time, I'm not too sure. That we'll of course have to see how things look up, because the consumer is always very fickle. We've seen this happen in a lot of models. You'll have a plethora of bookings and then very few actually translate into sales. But the cost that they've incurred to develop this model is not very high. So from that perspective, it will probably be a very good ROE kind of a launch for them. But the key for Mahindra would be, if you really want to play this card, it's very simple. You look at the monsoon. If the monsoon is decently normal and timely, you'll probably have tractors adding up to all the misses that they've had. So that could be another 25-30% upside in a very short span of 2 quarters. So I'm more excited about that. We'll have to watch. The first time I'm tracking monsoon very closely, apart from the heat that's particularly on right now. But M&M will probably benefit a lot if that goes off well.
Okay, let's in fact talk about the IOC numbers, and I think Sonal is now joining in to fill us in with the numbers. Sonal?
Thank you so much for that. Well, IOC, it is a top-down miss that has come by, and it is majorly led by their refining segment. It's an operational miss where we've seen EBITDA coming in at 10,435 crore rupees, which compares with the CNBC-TV18 poll of 14,700 crore rupees. Margins at 5.3% are lower than the poll of 7.1%. In terms of net profits, it's declined 40% on a quarter-on-quarter basis to come at 4,838 crore rupees. As I said, it's a refining-led miss. The calculated reported GRMs, they have come in at $8.4 per barrel, which compares with Motilal Oswal's estimates of around $15 per barrel. It was expected that the increase in Singapore GRMs, that would be the most beneficial for IOC. Between the three OMCs, any increase in GRMs benefits IOC the most, but that hasn't come by, and that's the reason we are seeing that miss coming by as well. Even the petchem segment has reported a loss for IOC this time around to the tune of around 380 crore rupees, which compares with the profit that the company saw on a sequential basis. So that is also where a disappointment has come by. Yes, the spreads were lower, but no one was expecting a loss in the petchem business as well. So the outlook going forward on petchem spreads will be very important. And what the marketing margins are, something that we would like to know. That is not something that the management's report every quarter. However, this time around is the refining-led losses or the miss that we are seeing in the numbers of IOC.
Okay, all right, got that. Sonal, thanks very much. And this is a far cry. Remember, when the whole bull and bear, and Sonal would present lots of those arguments during the quarter between whether refiners can keep going higher and higher or not. And the bulls would say that, yes, it's blue sky territories and, margins will remain intact. Well, that's what some of those projections obviously not really playing out, at least in IOC's case. Prakash, what do you think? Stocks falling off a cliff right now, down 4.5%, because I don't think anybody was prepared for this kind of a miss on petchem, on refining margins, and so on and so forth.
No, I agree. But, the question that begs an answer is, how much does it impact the EPS? And let's assume that GRMs remain in this band of $8 to $9. Would IOC kind of, continue to falter? The fact is that you are actually at the cusp of a price hike at the retail outlets post the elections. And as and when that happens, there'll be a big comeback in terms of the marketing margins also. So, the refining margins have taken away, the marketing margins will probably fill in the quarters to come by, is my sense. Secondly, IOC is gearing itself up for, a lot of the new energy initiatives. So when you buy into a stock like this, which is, I know it's appreciated quite well. We talked about it at, 95, 97 rupees, where the dividend itself, the yield was about 10%. But now what's happening is that because of the weight, the market cap itself having gone up so significantly, you'll have to give it time to catch up with the earnings to catch up on that. So I don't see any reason why it would be such a big disappointment. In fact, most institutional long-only players would actually buy into something like this. So it's a miss for the quarter, but not necessarily for the quarters to come by. And that's where the opportunity is. So at 240,000 crores market cap, I don't think you're overpaying for this thing, which is still available at less than 2 price to book. So there are certain advantages depending on your horizon. But I would definitely still buy into it if it is available at lower levels.
Okay, all right, Prakash, got that view. By the way, after IOC has fallen, you have HPCL that now moved to the low point of the day. Before the numbers came out of IOC, HPCL is trading in the green, so a big U-turn is what we have seen out there. Well, Prakash, I'm going to throw this at you. I'm not sure whether you track it, but you normally track some of these ancillaries. Vesuvius, the numbers look beautiful. They're growing at a fast clip. It appears they are gaining market share. It also appears that the focus on the value-added products, the flow division, for example, that is helping them. And that's why margins are at around 20.8%. Any view on the refractory space, namely Vesuvius or RHI that's gone into a slumber, or IFGL refractories, that today it's up, but otherwise that normally gets a big discount in comparison to these larger names?
No, absolutely, Nigel. So, fortunately, I had the opportunity to see the Vesuvius plant in UK in Corby once some time back, and I came back very impressed by the kind of innovation that they've done in making the usage of refractories for molten flow so efficient. But unfortunately, the Indian arm hasn't actually spent much of energies and resources in developing newer products or getting those introduced in a very aggressive way. They've been fairly conservative, very, very laid back in terms of that approach. But what's setting fire to this thing is, and today what's happened to a company that got listed, which is making furnaces. This whole sector is ready for an upgrade in terms of technology, and hence a PE re-rating. So, of course, you'll have to see the signs of the change, given the fact that we've got such huge steel capacities that have developed over the last few years. But whether the input side has matured enough or not, so we saw that in ferroalloys, it took some time, there was a lag, it happened. We've seen it in the graphite place. There is no reason why this space will not start firing up. But it's a question of timing. So, people have really been disappointed because it's not done much in spite of having everything else ticks all the boxes. But it's a question of, the re-rating beginnings. But my sense is at some point it will happen. But I have, far more value-based buying opportunities. So I don't look at these from a portfolio construct perspective. But I can tell you there could be some sort of a salience that will very soon develop in most of these players that supply flow solutions to the steel industry.
Prakash, we want you to talk about REC. The stock is up 10% after reporting the Q4 numbers. But before that, let's go across to Abhishek and, get a hold on these numbers. Abhishek.
Rima, the stock was up in trading session today before the numbers as well. The earnings have only added momentum to the, stock price rise that you are seeing. So first cut does show that provision write back has aided to robust earning growth for REC. Take a look at the NII. The growth is about 25.4% YOY and about 2.9% sequentially. The other income that's been robust, it's grown at 115.5% YOY and about 154% sequentially. The OPEX has risen for them. It's up 130.5% YOY and 83.2% sequentially. Operating profit growth is healthy on account of the other income growth that you are seeing. So operating profit growth is about 27% YOY and close to 6.5% sequentially. There is a provision write back of 711 crore. Now, generally in Q4, they do see provision write back. Like last year, same quarter, they had a provision write back of close to about 320 crore. And in the previous quarter, there was an expense of about 56 crore. So PAT is at 4,016 crore, up about 33.8% YOY and 22.9% sequentially. Their asset quality has also seen improvement with gross NPA ratio coming down to 2.71% versus 2.78% in the previous quarter. Net NPA ratio, however, has inched up by 4 basis points sequentially, but under control. Back to you.
Okay, 4-month consolidation on REC. Abhishek, thanks very much for that. But now it seems to be going back to the highs. I think 540 or so is the high that we saw in the month of February for REC. Prakash, any thoughts, REC, on the numbers and otherwise? And if you will, if you track Sudarshan Chemicals, there is this. I was reading a note, BNK note, and I think our colleague Sonal covered this last week. Basically talking about the large company in the US which is filed for bankruptcy. BNK says, that could benefit Sudarshan in quite substantially. They've actually upped their FY26 EPS by some 31%, 32%. Stocks up 5-6%. Just your thoughts if you track this one. Go on.
So unfortunately, Prashant, no, I haven't been tracking it in recent years. Though I remember it used to be one of the much talked about stock in the fragrance and flavors segment. And of course, they got into all these pigments and colors and all of those things, which is a very, very competitive market, very highly regulated. But, this would be a very specific issue where it's a narrow segment which they would benefit from if a big player moves out. So honestly, I don't have anything to add. Let me just take you to that REC comment that you'd asked for. REC, of course, I can see Abhishek getting so excited because the profits are way, way better than what we thought because of that, write back of sorts. But if the quality of the book does not deteriorate, which seems like they've kind of managed to get through, and if that quality remains stable, you will have these write backs once in a while, and there won't be any write-offs or provisioning that will damage the balance sheet. So that is something which is very important because between REC and PFC, today, they actually shoulder the burden of expanding India's power generation infrastructure. And of course, IRED also adds to that. But, with all of that appreciation that's happened, the realization and discovery that's happened, REC is still available at less than, 2 times book. And there was a time when it was available at, probably it's more than 2 times now, but it was available at 1.1, 1.2 times. And that's where, the big move happened. But if you compare it with an IREDA, which is so expensive just because it focuses on renewable and the default rate is different out there, much lower, I think REC will continue to surprise. Look at how Power Grid is delivering. Look at how Power Finance is delivering. All of the players in the power chain are just getting stronger. So I would believe the risk premium is much lower and actually will probably continue to get re-rated from here on as well.
Prakash, thank you very much for joining in. By the way, there's been a sharp fall in the markets in the last 10 minutes. The Nifty is now, off 90 points from the day's high. It's 22,700 on the Nifty. And even the Nifty Bank, which was almost touching that 50,000 level, has come off sharply. So from the day's high, The Nifty Bank is off close to about 300 points. There you have that fall in the last few minutes.
No 50,000 today, guys.
I think Thursday morning jinxed it.
Said it too soon. Not that close also, perhaps. But yeah, that's a pretty sharp dip that's coming through right now. Let's do one thing. We'll take a quick break. We'll come back on the other side and keep discussing the setup. We'll have Chandra Prakash Padiyar of Tata Asset Management joining in. Welcome back. You are with us on Closing Bell. Well, the other big story that we've been bringing to you all throughout the day is with respect to life insurers, because this whole issue on surrender value, guess what? It is back. Sources are telling us that the insurance regulator, IRDAI, is considering further changes to surrender value regulations for life insurers, and they may not be quite palatable for the industry. Let's go across and get more details with Yash. Yash, go on, just explain to us now what are these new changes that are perhaps being discussed?
Well, Surabhi, all life insurance companies, policyholders and investors thought that this matter around surrender value had been put to rest in March 2024 when that Gazette notification came which specified the surrender value limit which life insurance companies will have to pay to the policyholders in case of early surrenders. Of course, those numbers as were specified in that Gazette notification were in favor of life insurance companies as it did not increase the surrender value against what was proposed in December 2023. But a fresh set of development that we've picked up, raises those concerns again, brings that overhang again. What we've been given to understand from our sources is that IRDAI chairman recently met life insurance CEOs in which the issue of surrender value was discussed again. The regulator has expressed the intention to consider the increasing surrender value again. Now, of course, if you look at surrender value, there are two elements, a fixed or a guaranteed surrender value and a special surrender value. Guaranteed surrender value has been specified, as I mentioned, under the Gazette notification in March. But this is what we're talking about is the special surrender value, which the regulator is likely to consider increasing. Now, this special surrender value currently is voluntary. It differs from insurance company to insurance company and policy to policy. What we've been picking up is that the regulator is considering increasing that special surrender value, fixing it and making it mandatory to be paid by the life insurance companies to the policy holders. And hence, it raises fresh concerns on that uncertainty in terms of what could be the final move on this second element of total surrender value, which is special surrender value.
Okay. Yash, of course, has been reporting this story. The first time we reported this was in, I think, December last year, right, Yash? We said that IRDAI is considering something. Then I think we said that they're considering a big increase. And then, of course, there was the relaxation, and that relaxation came which is that no change, and now, of course, it's not a settled issue yet, is what Yash is saying. And at the margin, incrementally, and everything is incremental in markets, this is negative for life insurers if this were to go through, if this were to happen now finally. Yash, thank you very much for joining us with that. Now, Chandra Prakash Padiyar is with us. He's Senior Fund Manager at Tata Asset Management. Chandra Prakash, good to have you with us here. Thank you very much for your time. I was just looking at an interview you gave a couple of months back. You were talking about how you like the consumer durables space. So just... Is that the view still? And want to just expound on that a little bit? What exactly that space?
Yeah, hi Prashant, thank you so much for having me. So I think what we were saying is more about consumer discretionary and consumer durables as well, in the sense that we do see real estate doing well. The builder community or real estate developers are seeing very brisk sales every month, every quarter, every year nowadays. Demand supply is quite strong, which means that over the next 12, 24, 20, 36 months, these developers will hand over lots of inventory of real estate to the actual consumers, which in turn will lead to the fresh round of buying for household goods and home improvement areas, which obviously means the demand environment is likely to be positive. So we are looking for ideas in the consumer durables and consumer discretionary space for our portfolios. Unfortunately, or let's say the current environment is such that valuations are still on the higher side. So if you look at our portfolios, we are looking for ideas. As of now, the role that consumer durables and consumer discretionary stocks play in our portfolio is not very large. It's limited in nature. We are more looking for risk reward where it is in favor. So we are looking for fresh ideas in that space. Yes, I think we have some time. We have the next 12 months to kind of pick and choose some of those businesses.
Hi, afternoon. Can you talk about some of your recent ideas? Because everything seems to have moved up. So it's hard to find stocks where the risk reward is favorable. So can you apprise us of the activity that you've done in your portfolio over the last 2 or 3 months?
So I would not say 3 months. Let's say in the last 6 months, if you would look at, let's say I managed 2 funds, Tata Small Cap Fund and Tata Large and Mid Cap Fund. And in both the funds, we have made fairly large amount of changes in the portfolio in both the funds. In small caps, we've probably churned close to 50-60% of the portfolio. In large and mid cap, we would have churned 30-40% of the portfolio. So we have been able to identify a fairly large new number of stocks for both the funds in the small cap category and in the mid cap category. See, the situation is that, as you rightly said, especially in the mid cap space, over the last 3 years, we've seen a fairly large significant up move in stock prices, and maybe in many cases higher than what earnings delivery has been. So to some extent, valuation in the mid-cap space have moved higher, and it prompted us to change the portfolio, especially in the mid-cap part of the portfolio. And within segments, as you asked, I think we've been very optimistic on capital goods, industrials, financials in the market. And these are places where we've kind of identified select businesses where we believe risk reward is in favor. The only thing that I must highlight is that we generally do not look at very near-term outlook, which is the next 6 to 12-month outlook. We are more long-term investors. We don't churn too much. At times, our churn is less than 0.3, 0.2 on an annualized basis. So which means that we are looking for the next 2-3 years. And since we have a reasonable time horizon, we think there is enough and more opportunity to choose from a risk reward perspective. So we've been able to identify select businesses in those sectors.
Just hold on to that thought, Chandra Prakash. I'm going to come back to you, but take a look at the Nifty and the Nifty Bank. This is what Expiry brings to the table, even on a weekly basis. You have the Nifty Bank that's fallen 500 points. Yes, 500 points in a matter of around 22 to 23 minutes. Take a look at the intraday chart, both on the Nifty as well as the Nifty Bank. That's what telling you the story. Just take a look at that. 50,000, that's far away now from those levels. 550 points away. The Nifty Bank, from being up more than 100 points, is now down close to around 20 points. A fair bit of volatility has taken place. A few of these larger names have moved around. I think JSW Steel has moved to the low point of the race. That's one of the stocks. TCS has moved lower as well. And some of these banking names, ICICI Bank, big U-turn out there. Remember, those were some of the big movers that we saw when the markets did move to the high point. The ICICI Bank has moved into the red. It's down close to 1%. I think a couple of other banking names, Indus Bank is almost in the red as well as we speak. Kotak Mahindra Bank. So a big swing factor is what we are seeing. This is what Expiry brings to the table. Weekly Expiry. The bulls thought they had it. The bears are making a fight back. Well, Chandra Prakash, that's about market dynamics. But I'm looking at your portfolio and Radhiko Khaitan, that makes the risk. And I was just looking at the release that they put out yesterday. A bottle of whiskey they're selling for around 5 lakh rupees a bottle. Wow. Talk about single malt. Talk about people wanting to move up in terms of the consumption chain. Premium alcohol, getting buyers. 400 bottles is what they want to sell. I think 398 are done. How do you approach this theme?
Yes, I think there are very smart business managers today who've been able to premiumize their portfolio and launch good brands in the market where consumers have, and these are Indian companies, by the way, these are not global MNCs which have already had historical brands and just trying to bring in the country. And I think Radico is an example where companies have been able to launch and create brands in the country over a period of time. And that's how premiumization is happening in the portfolio for them as well. So, and as you rightly mentioned, we do have some of these businesses in our portfolio where we believe managers are able to scale profitably with higher and better margins.
Nigel, I think out of the remaining two, you said 398 are done, 2 are remaining out of the 400. We all know who's buying the last 2 bottles of that Radico whiskey, right?
It's available at Hyderabad airport, by the way, but for 5
all the details are in.
No.
Oh, okay, I think conversation post.
We'll skip this one, so we'll stick to the basics. You know what it is.
Okay, getting back to that conversation with Chandra Prakash. Chandra Prakash, so, give us a thought process now, specifically with respect to mid-caps. Like you're saying, there's been a fair amount of churn that you've also done in the portfolios. You have, representation from some consumer companies. Radico is one. I think in one of the schemes, you also have Varun Beverages. You have some engineering companies as well. There's NetWeb. So it's a whole mix. So what's the thought process with which you're approaching small caps now in terms of just the kind of ideas you're looking for?
So for us at Tata Mutual Fund, we believe in the investment philosophy of growth at reasonable price, where we are looking for businesses which can grow at a sustainable pace at a fast pace. And available at reasonable valuations, and which means that our claim to fame, actually, so to say, is to identify businesses early, where at the time when we are buying, most of the market may not be looking at those businesses favorably for some short-term reasons. Since we have the capacity and ability to buy and hold for a long period of time, we can ignore the short-term volatility and buy for the long term. And that is the reason why our stock our buying or our bottom-up stock picking approach has helped our portfolios over a long period of time. So when I mentioned that we have over the last 3-6 months, we've churned some part of the portfolio both in small cap and large and mid cap. We have actually bought businesses where market is probably mispricing, in our opinion, some of those businesses. Let's say in the CDMO pharmaceutical space or in the CDMO agrochemical space as well, and in asset management companies as well, or in financials, or in some in capital goods. So these are places where we've been able to identify good stocks or good businesses which are run by capable management teams, and where we believe these companies can scale at a very fast pace and surprise the market positively on earnings. I think what is going to be important, especially in the next 6 to 12 months, is that we are going to see increasingly more divergence in companies' performance delivery. Not all companies, not all sectors will be able to deliver what market expects. So there is going to be, for example, what has happened in the last 3 years is companies, business after business, sectors after sectors, have outperformed expectations consistently for 2 to 3 years back to back. And that is why in our market, we've seen a very sharp re-rating across the board. Incrementally over the next 6 to 12 months, our view at least is that you will see more divergence. You will see very selectively businesses outperforming expectations, which means that valuations incrementally going forward needs to be taken with a pinch of salt, meaning that you need to be very selective in what you buy. And lastly, our view is that incremental returns or return expectation needs to be on the lower side, I think, given the re-rating that we've seen in the last, especially in the last 6 to 9 months.
Got it. So trying to buy businesses which you think are being mispriced by the market. Now, I picked up on two, and maybe that'll be a conversation for the next time. You said pharmaceuticals and, interestingly, agrochemicals. Very interesting, because I think chemicals as a space hasn't done anything. It's been down in the darkness. So perhaps next time we'll ask you more about that call as well. But thank you so much. Good to have you on the show this afternoon. Looking forward to the next conversation. Well, with that, let's move on and talk about the big global event that markets will eye tonight. The Federal Reserve is all set to release its interest rate decision. This, of course, takes place tomorrow, and we come back and react to it only on Thursday morning. And markets are hoping for that summer rate cut, and those rate cut hopes are also fading because of the data points that recently show stubborn, sticky inflation and resilient growth. CNBC's Steve Leisman breaks down the results from the CNBC latest Fed survey.
The April CNBC Fed survey showing forecasters after last week's numbers ratcheting up their outlook for Q2 growth and for 2024 inflation. We've seen repeated growth upgrades, but this is one of the most substantial inflation boosts to the outlook we've seen in more than a year. After weaker than expected GDP report last week, but strong consumer spending, the 29 respondents boosted second quarter real GDP to 2.1 from 1.4%. Pretty remarkable increase, transferring the miss essentially from Q1 into growth for Q2. Inflation is now seen ending the year above 3%, up from 2.7% in the prior survey. That number is actually in line with the Fed's forecast for core PCE for the full year at 2.6%. But it's still above target and assumes a CPI that usually runs about a half a point hotter than the PCE. About half of respondents say the recent run of higher inflation is just a blip, but another half say it could be part of a long-term stall in inflation progress that will keep inflation stuck around 3% if the Fed doesn't act. Barry Knapp from Ironside's Macroeconomics writes, inflation is likely to run above target until and unless there is fiscal policy tightening. And Richard Bernstein says few have yet to consider the secular inflation pressures of deglobalization. It seems unlikely we'll ever return to secular 2% inflation without a sustained period of subpar growth. Unemployment is seen rising steadily from a current rate of 3.8% to 4.1% by year end and 4.3% by next year. The economy will have gotten off cheap, and that would be a soft landing if that's all there is in terms of the rise in unemployment. Meanwhile, 50% of respondents say the Fed cannot hit its inflation target without growth running below potential and the unemployment rate rising at least by a half a point. How much the economy, or if the economy, has to weaken for the Fed to hit its 2% inflation target is one of the pressing questions right now at the central bank.
Okay, all right. That was Steve Leisman with the latest expectations from the Federal Reserve. We'll take a break on that and we'll come back on the other side. And of course, as usual, we'll get you a check on all the dealing room buzz in D Street Chatter and also some final calls with Mitesh for the day.
Welcome back. Well, the markets have been fairly volatile, but it has that element of expiry that's playing out today. Nimesh joins us. So, Nimesh, what are you picking up? Was there some selling or is it expiry related?
Well, look, to my knowledge, in the last 30 minutes, there's going to be MOC basket buying. So let's see how the last 30 minutes pans out. But again, Nifty at a fresh all-time, and then you have seen a bit of a profit booking in today's market. But again, the last few days of rally is largely led by large cap names. So that outperformance in the broader market, especially in the large cap stocks, continue. Today we have a big move in the power PSUs, right? But again, from a flow perspective, there is buying interest in private banks as well as in the PSU stocks. So those are the sectors stocks which are well bid from the larger FIs today. As I said, there is a small MOC basket buying as well into select stocks, but maybe you'll see a bit of reaction on those names as well. I guess even from a bank Nifty point of view, while it's sharply corrected because of the expiry, but again, I think it's on the verge of a breakout. So watch out for Nifty Bank because that potentially can lead this Nifty to higher levels. So that's the overall feedback. I guess even the auto stocks are buzzing in trade today. There were a couple of new launches as well. Of course, we have the monthly data to watch out for tomorrow. But again, from a flow perspective, there is buying interest, especially in private banks as well as in select PSU names.
So it appears then that it's expiry related, since you're saying that the Nifty Bank still is the big one that could lead the markets higher. What about individual stocks, Nimesh? What are you picking up?
So in terms of individual names, the first stock on my list is CSL Finance, a small stock, 1,000 crore market cap, but the stock has sharply recovered from intraday lows after there was a large block. Nearly 7% equity got changed hands. I understand it's a clean out trade from a private equity investor and a couple of large family offices were buyer in today's block. So the disclosures could be quite interesting in CSL Finance. The second name is AB Capital. Well, the stock is at day's low today, but in general of late, the stock has seen some bit of momentum and there is a lot of HNI interest as well in AB Capital of late. But the stock is under pressure on the back of a rumor or a buzz that there could be a very large block deal in AB Capital very soon. I was looking at the block deal data, the shareholding pattern. Two potential investors could be sellers. So that's the reason why AB Capital is under pressure. The third name is Ashok Leyland. After a long time, some interest seems to be back from larger FIs in Ashok Leyland, and the street is anticipating some corporate development as well in Ashok Leyland, and that's the reason why that stock is buzzing in trade. And the last is both PFC and REC. Well, there is a bit of short covering element as well, but there are strong buy flows as well from larger FIs in both REC and PFC in today's market. So expect high delivery volumes in both these stocks in today's trade.
Okay. All right, got that, Nimesh. Thanks very much. Just tracking this market fall has been quite dramatic, to say the least. I mean, now it's a full 50-point dip on the Nifty. The Bank Nifty has also turned negative. But for the Nifty, that fall is a little more pronounced because beyond banks, a lot of other financials have also been falling. Look at that absolute decline that stepped in. Bajaj Finance is the one that's losing a lot of ground. Shriram Finance, Bajaj Finserv. So a lot of the non-banks as well under the heat. TCS is down. Other names like L&T, Infosys. It's across the board selling really on the index that's come in, not just on banks, but in other big stocks as well. I think we can take it back to Nigel now. Okay, before we go back to Nigel on Ambuja, let's bring in Mitesh as well and get some final advice in. Very, very volatile last 15-20 minutes. Mitesh, what's the advice now?
So, we've kind of cut off and exited the index long positions given the way this Bank Nifty has fallen. So, while it still looks good to me, I would want to see the holiday out and then take a trade, which was not the view about half an hour back. But then these kind of things happen. On the stock side, though, I have a BTST on Crompton with a stop at about 315 for targets of 325. And the other one, which I like is Coforge. That's something which is trying to make maybe a double bottom. So we'll take a very tight stop here, BTST with a stop at 50.80 for targets of 51.50.
Okay, got that. That Bank Nifty chart is really dramatic. Everything changed in the last 1 hour or so. We'll just pull up the Bank Nifty chart again. So much happened in the last 50 odd minutes. Just look at that. Quite incredible, to say the least. So that's banks for you. But Nigel, Ambuja, is it going to be as good a show as Ultratech? What do you think?
Well, Ultratech has been the outlier this quarter, in fact, because they delivered very, very good numbers and it's the king of the pack. Ambuja Cements, we'll have to see how that goes. In terms of a revenue number, expected to come up by close to around 12.5% approximately. The EBITDA number, well, that'll be up by close to around 15%. So on a year-to-year basis, there'll be a mild improvement out there. and profitability should come up by close to around 23%. What are the factors at play? Bulk of the top line growth will be led by volumes, because volumes should grow up by close to around 14%. Why is that? In the base year, there was a shutdown of the Himachal Pradesh unit, and also higher intercompany shares between ACC, Sanghi, as well as Ambuja Cement. So we'll have to clear that out, because ACC, the volume growth is very, very good. How much of that was because of the agreement? And we know now Sanghi as well is ramping up. So on the top line, there could be a beat because the volumes could beat. Next up, realizations will be down by close to around 4%, maybe a little lower contraction in comparison to its peers, because it doesn't have exposure to South India. Out there, pricing was very, very weak, and it has a high amount of exposure to West India, where pricing was fairly stable. So that's what could save them the blushes. Margins, well, it could expand a little bit on a year-on-year basis because of operating leverage, lower input costs as fuel costs have come down. And also, there'll be some group synergies that will play out like we saw in ACC. The PAT will be impacted because of higher depreciation as well as interest cost. And also in the base year, the tax rate was much lower. So we'll have to keep out on that front. Management commentary will be very, very crucial. And also we'll track what is the pricing and demand scenario. So Ambuja Cements is the number that we'll be tracking for tomorrow's session. Back to you.
Okay, and not just that, the auto sales for the month of April is also due tomorrow. Sonia joins in with the key expectations. Sonia.
Well, thanks a lot for that. So as you rightly pointed out, auto sales for the month of April are due tomorrow, but tomorrow is Labor Day, so you may not get the, the numbers tomorrow. But let me give you a sense of what the trend is this time around. Waiting period in the passenger vehicle space has gone down, so there's a modest growth that we're expecting in the passenger vehicle segment. The two-wheeler segment is expected to see a good growth because of the marriage season this time. Jefferies put out a note where they said that the wholesale numbers for two-wheeler players like TVS Motor, Bajaj and Hero MotoCorp are expected to go up by 15 to 18% year-on-year. The tractor segment is likely to remain flat. Nomura estimates a 5% growth in FY25 for the industry, for the tractor industry, while the truck segment is expected to see a mid-single-digit growth this time around. Just taking you through individual numbers, as I said, the commercial vehicle space is expected to be quite, moderate to some amount of pressure. Ashok Leyland, the Nomura forecast just a 6.5% year-on-year growth. Tata Motors could be barely about 8.5%. Maruti, we are looking at an 8.1% growth. M&M's auto division is expected to grow by 10.8%. M&M tractor division barely a growth of 0.3%. Bajaj Auto, we are expecting a growth of 9.9% as per Nomura's estimates. Eicher Motors could be the strongest of the lot with almost a 15% growth. Hero MotoCorp, we are looking at a 27% growth, largely because of the improvement in the rural market for Hero MotoCorp. And TVS Motor has also been pretty strong with a growth of around 18.5% as per Nomura's estimates. Back to you.
Okay, all right, Sonia, thank you very much for that. Talking about auto sales numbers, these are monthly numbers that we will get. Listening to some comments that we got from Suzuki, Maruti Suzuki's chairman, R.C. Bhargava. This is post their fourth quarter numbers. He sort of spoke to us about how the SUV segment continues to lead growth. The passenger car, the entry-level sort of customers, he said, are still absent from the market. On margins, he added a little bit as well. Listen in.
In the last 2 years, actually, what has been happening is that the SUV segment has been the fastest growing segment. And I think the bulk of our growth has also come from that segment. Whether it's in numbers or whether it's in top line or whether it's in profit also, I guess. It's all fundamentally come from the SUV segment. I think the trend will continue this year, at least with the SUV segment leading the entire sales of cars in India. I don't think there's any reason to think that there will be a change in the consumer thinking or behavior regarding what they want in this segment. As I said, the entry-level segment, the small car segment buyers are still not coming back to the car market. They are still out of the car market. And amongst those who buy cars in the more expensive bracket, the sedans fundamentally are losing ground to hatchback, to the SUV. Still not very clear what is going to happen to commodity prices. Some items are going up, but some items are not going up. They're still coming down. What the net result will be, I think we have to wait a little bit longer to see the impact of this Iran-Israel situation and what would happen to China. If electric car sales continue to fall world over, the total car market will come down globally. which will mean less demand for various materials. That could also have an impact on material prices.
Welcome back. Well, let's get it. Jay Bala, as always. Hi, Jay. Good afternoon. Good to see you again. First of all, Jay, before I want your stock picks for today and from now on, but I need to compliment you. You know, I remember earlier this year we were chatting, we were talking about 5-6 rate cuts. You said, I think it's only going to be 2. It appears the street is aligning with that. And also you said on the chart, something is wrong with Kotak Mahindra Bank and that stock has collapsed. Fresh call on both these two and fill us in with your picks as well.
Yeah, let's first straight go to the stock picks, new stock picks. I'll come back to these after that. Bullish on Schaeffler India. I think it's the decline from 2022 looks corrective, and today's move looks like start of a fresh move towards all-time high. So a stop loss below 3150 for Schaeffler, and I'm expecting it to touch about 5,000. And I'm slightly less bullish, but bullish on Dr. Reddy. Stop loss at about 5880 and a new objective of about 6800. I'm bullish on the pharma sector. In fact, when it comes to the US 10-year yields, I was saying that when it was 6 to 7 cuts expectations, I was pointing to a long-term trajectory of about 800 bips for the US 10-year yields. And I said Federal backpedal, and you're probably looking at hikes. And so that's exactly what is happening. Today, if the, tomorrow is a Fed meet, and if it were to 10-year yields were to cross 470, we're likely to see acceleration fast above the 500 bips we saw recently. When it comes to Kotak, on April 3rd, I think 3 weeks back, I had a call on it, and I said it first dropped to 1620, and then bounced, 1630, and then bounced, and then dropped to 1430, and then finally completed target of 1,000. So this is going to happen over several months, not a short-term target. So we need to, watch very closely and play this.
Jay, your view is that the IT sector looks weak and it could be the first sector to go back to its 2023 lows. Talk to us about your view there.
That's right, Rima. See, the 30,000 on the Nifty IT index is a very important support, and already it's broken down below 34,200. So, and we are seeing, IT sector exhibiting weakness, mainly the frontline names. And, I've been bullish on the mid-cap names since 2022 October. But as I said a few weeks back, I'm asking people to take profits over there too. And we've seen that result in Persistent, Coforge, and a few other names. So IT sector is probably the weakest, and it's taking the role of the banking index, which was the laggard, so sometime between October and December.
Jay, hi, good afternoon. So we had this high drama play out on the Bank Nifty just about half an hour back, right? What do you think lies ahead? I mean, do you think it has the steam to go into a more sustained uptrend above 50,000? And if yes, and which are the leaders? Which are the stocks that perhaps could be taking it there?
See, both the banking Nifty and the Nifty are doing something very important. And before I get to that, I think SBI and ICICI are the stronger one, and even Axis are the stronger one. So strength is coming from here. But both these indices are doing something very important. They are pushing to new highs, and it's getting rejected even on the same day. And most of the new highs have got pushed back into the previous range. So that's a telltale negative sign for both these indices. So the markets are dropping back to critical support, but not breaking it. And that's doing something more important that breeds complacency, and the market starts to look infallible for the market players. So when the support breaks, the critical support breaks for both the banking index and the Nifty, that's when people are not going to understand what hit them. So there's a lot of complacency in the market. The price action is saying something, and people aren't listening to it.
Jay was saying that enjoy the party, stay near the door. And that has proved fruitful advice today, Jay, huh?
And we've been most bullish on USD JPY cross, and very few expected it to cross 152. And probably a currency crisis brewing there if it were to take out 164.
Yeah, no, absolutely. Although it's pulled back, right, after crossing 160. So we'll see. I mean, but we'll wrap up things here. We're done for the day. Jay, great conversation as always. Thank you very much for joining us. And we'll have you back soon again to sort of take this forward. I think we'll just wrap up, with what we've done, which is, of course, sell-off from 2:30 onwards. I mean, from the beginning of when we started this show, the market sold off very aggressively. The Nifty losing about 100 points, and the Nifty Bank from the highs losing, I think, almost about 650 points or so. Advanced decline completely turned, and I think the mid and the small cap indices, mid-cap index will end with nothing. I mean, absolutely flat. And that had about 0.5% when we sort of looked at that at about 215 or so. And the small cap index also leaves absolutely unchanged. So this is a pretty dramatic turn of events to end this sort of Tuesday session. Prima.
Well, autos did well. So M&M continued to hold on to all its gains. Top Nifty gainer, 5% up on that. But even the others, Eicher, Maruti Suzuki, Tata Motors, all ending with gains of about 1%. Ahead of the April auto sales numbers. Power Grid, Shriram Finance, HDFC Life were a couple of the other notable gainers. On the way down, IT took a hit, the Nifty IT index losing more than 1%. Tech Mahindra, the star in yesterday's trade after that double upgrade from Morgan Stanley, today gave up close to about 2%, the top loser there. HCL Tech also under pressure. Dr. Reddy's was down 1.5%.
Just to add a couple of earnings highlights, Jana Small Finance Bank, 20% circuit. REC 9 to 10% higher, Gillette 7%, KFin and Exide. These are some of the names, mid caps and small caps, which had the best result reactions. On the way down, IOC was a big disappointment, 4.5% down on IOC, and Tata Chemicals as well. Weak quarter, pulled down GHCL as well with it actually, with the concerns around the way the soda ash cycle is playing out. So 3-4% down on these stocks. But otherwise, high drama in the last 1 hour. And the market, the Nifty and the Bank Nifty, unable to hold on to the big gains. So let's see how this plays out. We'll come back on Thursday morning. We will have the Fed reaction and the Fed result in front of us as well. And we'll pick it up from there. But for now, it's a wrap from the entire Closing Bell team. Thank you so much for watching. Markets forward. We'll keep the action coming up next.